This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. And straight ahead on the program, investors await another batch of earnings, and we'll tell you what to expect from Disney. I'm Tom Busby in New York.
I'm Kaylee Lyons in Washington, where we're looking forward to the third Republican presidential primary debate.
I'm Caroline Hepker here in London, where we're looking ahead to earnings from the Swiss banking giant UBS.
I'm Brian Curtis in Hong Kong. We look at possible deliverables on the Australian Prime Minister Anthony Albanese's trip to China.
That's all straight ahead on Bloomberg Daybreak Weekend. The business news you need to wrap up your week in just one 15-minute podcast. Available on Apple, Spotify, the Bloomberg Business app, and everywhere you get your podcasts.
Good day to you. I'm Tom Busby, and we begin today's program with earnings. They continue with more than 50 companies in the S&P 500 reporting this week, and heading that list, Disney. And for a preview, we welcome Bloomberg Intelligence U.S. media analyst Geetha Raghunathan. Well, now, before we dive into Disney's upcoming earnings, let's talk about some big moves that the world's biggest media company just made this past week, announcing ESPN Bet, its official sports betting platform. That's a partnership with Penn Entertainment. It'll begin taking bets in 17 states November 14th. What does this mean for Disney?
Yeah, it was a really important move by ESPN, Tom. I mean, they had kind of been putting this off for years. They'd been exploring deals with different sports betting partners, including, DraftKings. They finally did this deal with Penn Entertainment in August. And of course, now Penn is rebranding its Barstool Sportsbook as ESPN Bet. I think what it really tells us is the power of the ESPN brand. This move comes just as Disney actually disclosed standalone financials for ESPN for the very first time in its history. And what we get to know about ESPN is, it is, of course, the top line is under pressure, but it is still a very, very profitable business. This is a business that is generating roughly about $17 billion in revenue, but more importantly, around $3 billion in EBITDA. So it is definitely a cash cow. It is the biggest, one of the biggest linear TV properties for ESPN. And I think, with when ESPN Bet kind of goes out, you'll again get to see, the power of that ESPN brand. And it's going to be interesting to see how it kind of plays out for Disney. Remember, Disney is getting about $2 billion over 10 years for the use of that ESPN name. So again, I think it really plays into, kind of what the strategic direction could be for ESPN in the future.
Yeah, and another direction Disney's taking is a bigger bet into streaming by obtaining the 1/3 stake in Hulu that it didn't already own. And what's the strategy there?
Yeah, I think it's really important for Disney to kind of consolidate its streaming properties. Obviously, it has a huge powerhouse in Disney Plus, but with Hulu, it's kind of been a little bit of a head scratcher because of the 66% ownership that Disney owns, but the 33% that it doesn't own, which is still kind of owned by Comcast. And so I think it's essential for Disney to kind of go ahead and acquire that remaining 33%, because then they kind of get to have a singular streaming strategy with all of their different products, whether it's Disney Plus, whether it's ESPN Plus, and then Hulu. And then, of course, the more important thing is you not only get to sell, an integrated product, an integrated bundle, but also you get to realize some really huge cost and revenue savings. I mean, we're estimating about anywhere from about $1 to $1.5 billion in cost savings once they're able to kind of bring Hulu under complete control.
And 50 million subscribers is nothing to sneeze at either.
Absolutely. Plus, remember, Hulu has a very, very robust advertising business. I mean, this is a business that already generates about $3.5 billion in advertising. It is the most successful streaming ad product out there, just as everybody else is kind of trying to get into that ad-based tier, whether it's Netflix, whether it's Amazon Prime, and even Disney Plus. I mean, none of them have had the success that Hulu has had. So it's kind of really critical for Disney to build on that success that Hulu already has in the marketplace.
Well, let's turn to earnings then for last quarter. We expect, as always, theme parks, cruise division having another blockbuster quarter. But there's a lot more to the company. And what are you expecting to see this coming week?
Yeah, Tom, it's really interesting. So it's not really the results so much, but it's just this whole barrage of other issues that is kind of weighing on the Disney stock right now. I mean, whether it is the ESPN strategic direction, as you just spoke about, or Hulu, they're even looking at getting rid of some of their linear TV assets. They were looking at the ABC network, the ABC stations, for instance. They're looking to get out of their India business. So there's just so many different things. There's so much of different work that needs to be done. But I would say, arguably, the most important thing for them to do right now is to kind of really rev up their content engine. Right, we've seen them kind of put out a whole bunch of movies, whether it was, Indiana Jones or Elemental, that didn't really perform or live up to expectations at the global box office. And so they're really kind of rethinking their content strategy right now, looking at how to kind of reinvigorate a lot of, the existing franchises, a lot of the sequels. There's a lot going on. And of course, I think, obviously Bob Iger has made considerable progress on a lot of the different things, whether it's restructuring, whether it's bringing down costs. They're doing everything that they can, whatever seems fixable. But again, a lot of questions still remain.
And they've had talks about shedding some of those media assets, not ESPN, but as you mentioned, the Disney Channel, National Geographic, A&E, Lifetime, a whole bunch of linear assets. But have we seen any progress on that? I know we've seen Byron Allen saying he made a bid, some others in talks, but is there any movement?
Not since those pieces of news came out. There hasn't been any significant movement. The only thing that we've heard in the meantime is that they're really kind of looking hard at getting somebody to buy out their India business, which could be worth upwards of $10 billion. So that would be a huge cash influx in for Disney, but we really haven't seen any movement on the rest of the linear TV portfolio.
Well, let's talk about Disney also playing hardball this past quarter with Charter Communications' Spectrum cable platform on a carriage deal. And Spectrum says they lost 100,000 subscribers. That's after a 10-day blackout of all Disney channels, including ESPN, just as college football was starting up. But could this change or maybe accelerate the implementation of an a la carte menu from cable providers?
I definitely think that deal had huge ramifications across the pay TV landscape. One thing that we definitely got to know is I think when we have these carriage deals come up in the future between the content owners and the pay TV distributors, it is going to be a hybrid distribution model. I mean, it is going to be a combination of both linear TV and streaming. And you bring up a very, very good point in terms of, does that kind of expedite this whole transition into ESPN going a la carte? And I think to a certain extent it does. I mean, they've already kind of secured carriage with Charter for when that actually does happen. Now, of course, we don't know the date just yet. One of the things that is pending is the renewal of the NBA deal, because they do need to secure digital rights, for the NBA games. So that will happen only sometime in 2024, 2025. But it is definitely going to happen. And Disney has said this multiple times. And yes, so, they are trying to, I mean, the pay TV bundle is obviously not going to go away completely, but it is definitely losing its relevance in some ways, at least the linear TV portion of it, as more and more consumers move to streaming.
Wow. Well, let's shift it back then to what you're looking forward to this week in Disney earnings. With all these moving parts, all these different divisions they have, what will it mean for investors? What are we expecting to see?
I think the biggest thing that we're really looking for, and I think this could be a huge catalyst for the stock, if there's any language surrounding streaming profitability and how quickly Disney can kind of cut costs. Remember, they have made a lot of progress on reducing streaming losses, but they still did lose about $4 billion last year on Disney Plus, and they are still set to lose about $2.7 billion again this year. Yes, they're making progress, but if they can get there faster, if they can get to a break even faster, if they can get to positive profits faster, that would bring investors a lot of cheer. We also know that they did raise their streaming prices for the second time this year. They upped the monthly price of the ad-free Disney Plus by about 25%. So again, it would be interesting to see if there's been some increasing cancellations because of that, how that has been trending, and if that really had made some significant dent in terms of their revenue numbers as well.
Now, one more thing I want to talk about, and that is Bob Iger, the former and present CEO. Any idea on how long he's going to stay there? Succession plans? Are we going to see another big drama unfold if it doesn't work out the first time?
Yeah, this has just been such a constant pain point for Disney. So we know that Bob Iger has another 2 years. He definitely needs those extra 2 years. We know Disney definitely needs the 2 years to kind of get this whole turnaround in motion. The immediate thing that they do need is a permanent CFO, because we know the current CFO is just temporary. So they definitely need that. About the succession drama, I mean, Tom, it's anybody's guess is as good as mine. I mean, they do have a little bit of time, but we'll have to really see how it kind of plays out. I know it is top of mind for Bob Iger, and I'm sure he has a lot of candidates that he's lined up.
Oh, yeah. He's retired before, so I'm sure he's already thinking about it again. Well, our thanks to Bloomberg Intelligence U.S. media analyst Geetha Raghunathan. And coming up on Bloomberg Daybreak Weekend, Republicans get set for their third presidential debate. Will Donald Trump participate? I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Up later in our program, we take you to Europe and preview earnings from UBS. But first, the third Republican presidential debate taking place this Wednesday in Miami. For more, let's head to our Bloomberg 99.1 newsroom in Washington and Bloomberg Sound On co-host Kaylee Lines.
That's right, Tom. We're gearing up for round 3. The third primary debate between the Republican presidential hopefuls. It takes place in Miami this coming Wednesday, and despite it being in his adoptive home state, no, the former president and frontrunner Donald Trump will not be in attendance again. And a few others who had been on the stage in the prior debates will not be on this one, partially because the threshold to qualify was raised. A candidate needs to have multiple polls that show them at 4% or higher and need to have at least 70,000 unique donors. So that might be a bummer for some. Plus, former Vice President Pence won't be there because, well, he dropped out of the race entirely last weekend.
The Bible tells us that there's a time for every purpose under heaven. And traveling across the country over the past 6 months, I came here to say it's become clear to me, this is not my time.
So with that, it's going to be a much smaller group on the third stage. Here with a preview before she makes the trip to Florida herself is Nancy Cook, who covers national politics for us here at Bloomberg and all things 2024. So, Nancy, first question. Of the 5 we're expecting to be on the stage, that would be DeSantis, Haley, Ramaswamy, Christie, and Senator Tim Scott. Who has the most to gain and who has the most to lose?
Well, I would say Nikki Haley probably has the most to gain. She has had 2 really good prior debates. We've seen her poll numbers rising. A lot of donors who have become disenchanted with DeSantis's campaign have been flocking towards her. And I do think that she has a real chance to emerge as the alternative to Donald Trump. She's also been spending a ton of time in New Hampshire over the past 6 months, and we've seen her poll numbers go up in Iowa. And so she is definitely on the rise. And if she can have a good debate, and she has shown that she is a good debater, she really could capitalize on that momentum, impress more donors, and sort of continue to reintroduce herself to the American public.
So is Nikki Haley's gain then kind of on the other side of the coin, Ron DeSantis's loss? Because you mentioned how she's been gaining in, say, polls in Iowa. One this past week showed them tied.
Exactly. And the other interesting data points from that Iowa poll was that she's doing really well with suburban voters, and she's also appealing to independents. So 100% her gain is DeSantis's loss. And speaking of him, I do think that he is the one that has the most to lose. He has not managed to land a breakout performance or even really a breakout moment in the last 2 debates, although he has tried. And I just think his performances have been sort of meh. And I think that if he has sort of registered a third one and Haley sort of is taking off again, donors are just going to keep going towards her. And I think the challenge for him is, the donor space, the donors are sort of souring on him. They already have soured on him a bit. And at some point, you have to have enough money to stay in the race for a while.
And we know he's had a bit of a money management problem over the course of his campaign as well.
Right. Like, he has taken a lot of money in, and his super PAC has money. But part of the problem is that they spend a lot of money. He flies private everywhere. He has to charter planes to go wherever he goes. And so that really, which is his own choice, I should say. It's a choice. But it's definitely, they go through money more so than other folks. And so you're really trying to see, well, can he last not just through Iowa, but could he last through Super Tuesday in March? And so that's really what I'll be looking for.
So we talk about lasting through Iowa, and it's interesting that South Carolina Senator Tim Scott qualified for this debate this past week after he really has shifted his campaign strategy to essentially focus only on Iowa. I believe he's been recently quoted as saying it's Iowa or bust. Is there really any oxygen for him in this race on this debate stage when so much of the focus is on Nikki Haley and Ron DeSantis?
Not really. He hasn't. Senator Scott has not distinguished himself on the debate stage at all so far. I do think that he could, pick up some Pence voters in Iowa. Tim Scott really has made a play for evangelical voters. He really plays up his faith on the campaign trail. So Pence dropping out, particularly in Iowa where there are so many evangelical voters, could help Scott. But I don't think enough so at this point to earn the nomination.
Well, you say that Scott hasn't really been able to distinguish himself, and one of these candidates who was able to at least suck up a lot of oxygen in the prior debates we've seen is Vivek Ramaswamy. Where is his campaign right now? I feel like we heard so much about him after the first debate because he really did kind of make a mark. He took a lot of attacks from the other candidates as well. And then I feel like it kind of faded.
Yeah, he's been out and about lately. He was up in New Hampshire, for some appearances. He has spent a lot of time in New Hampshire. So he's still definitely out there campaigning. It will be interesting to see what he does in the debate because, he did suck up so much oxygen in the first debate and people were sort of impressed by that, but then also he annoyed people because people felt like he was sort of the kid brother, harassing people and taking attention by the end of it. And so I felt like it was sort of a double-edged sword there. He is a very skilled debater. He was a college debater. He is articulate. The interesting thing about him is that he loves Trump, and so he sort of refuses to break from Trump, whereas the other candidates on the stage are really trying to distinguish themselves from the former president. And that's a sort of difference between them.
Or just go after them intentionally, like Governor Chris Christie has done in the past couple debates. Remember, in the second debate, he looked directly at the camera and said, "Trump, I know you're watching." So I'll be interested to see if we get some kind of reiteration of that in the third go-around. But on the subject of the former president, how heavily is he going to feature? He still very much is the front runner, perhaps even cemented even more so in the lead up to this. So once again, unavoidable topic?
I think an unavoidable topic. I felt like in the last debate, they covered so much ground. I was just reading some coverage of it to remind myself yesterday. They talked about inflation and housing and China and, the flow of illicit drugs over the border. They did talk about Trump and some people went after Trump, but, it wasn't like everybody wanted to take down the former president, even though he's really the front runner and loomed over the debate. His absence loomed over it. What will be interesting Wednesday night is that he is holding a counter-programming event also in Florida, not that far away from the debate.
Yeah, the two Florida men in Florida. In their home state, essentially. So this will be an interesting dynamic. You mentioned there, Nancy, how a lot of ground was covered in the second debate, topic-wise, from inflation to schools to other aspects of it. One thing that hadn't happened yet, though, was October 7th and the conflict erupting between Israel and Hamas. So I would imagine they're going to face some questions about that this time around. Do we have a sense of where the different candidates are on that issue?
Well, that's a great point. And the candidates really have tried to appear all over this conflict, particularly DeSantis and Nikki Haley. So DeSantis made this big show of, sending a plane from Florida to try to get, Americans or Israelis, bring them back to Florida and try to appear on top of it. Haley has really, she was the UN ambassador in the Trump administration. She does have some concrete foreign policy experience. She has really tried to appear very out front of that. So I do feel like foreign policy, not just the Israeli-Hamas war, but also the Ukraine war. Do you know what I mean? What this means for Iran. I feel like this will be potentially a very foreign policy heavy debate.
One of the most memorable moments of the first debate for me was Nikki Haley telling Vivek Ramaswamy that he had no foreign policy experience, and it showed. So I wonder how he might address that this time around, because he has been in the prior debates pretty vocal about not wanting to provide further support for Ukraine. And a lot of people see these issues as tied together.
They do. And I mean, that's sort of a divide in the Republican Party at this point about who wants to support Israel financially. I would say that there's more broad support for that, and who wants to keep giving aid to Ukraine. And there's a ton of Republicans who feel like the aid to Ukraine should stop. Ramaswamy is one of them. DeSantis has sort of gone back and forth on that. And then there's a bunch of House Republicans, including the new speaker, who are much more skeptical of ongoing aid to Ukraine.
Yep, it's a hot topic on Capitol Hill, and I would imagine it'll be a hot topic on the stage this coming week as well. Safe travels to Florida, Nancy. Thank you so much. That's Nancy Cook, who helps cover national politics for us here at Bloomberg. And Tom, make sure to turn the TV on Wednesday night.
Thank you, Kaylee. That was Bloomberg Sound On co-host Kaylee Lyons reporting from our Bloomberg 99.1 newsroom in Washington. And you can hear Sound On weekdays 1 to 3 p.m. on Bloomberg Radio. And coming up on Bloomberg Daybreak Weekend, we get you ready for earnings from UBS. I'm Tom Busby, and this is Bloomberg. I'm Tom Busby in New York with your global look ahead at the top stories for investors in the coming week. We heard from all the big U.S. banks, and now Switzerland's UBS reports earnings this week. UBS's second quarter includes 1 month of Credit Suisse numbers. And for more, let's head to London and bring in Bloomberg Daybreak Europe anchor Caroline Hepker.
Tom, Bloomberg Intelligence expects US banks to outperform European peers. There is particular focus, though, on UBS, given the integration of Credit Suisse. UBS is skewed to equities trading, which has exceeded expectations in the aggregate. Overall, shares in European financials are up about 8% year to date, with the ECB sticking to its higher for longer view. So Bloomberg's Kriti Gupta and I have been speaking to our Swiss banking and wealth reporter, Marion Helftemeyer, to get a preview of what to expect from UBS, and on the overall banking picture, our Bloomberg opinion columnist Paul J. Davies. I began by asking Paul about why banks seem to be benefiting from higher interest rates and yet still not actually feeling a hit from higher default rates and other issues that might affect them. We asked him why not.
Well, I think the interesting thing is that the economy is still, much stronger than perhaps many people, expected it to be. Or, well, much stronger is maybe a bit of an exaggeration. It's not, turning down or slowing down quite as rapidly as we might have expected. I mean, in the US, the economy is going great, and banks have been doing really, really well over there. In Europe, it's a bit different. It's a lot slower. Germany is started to shrink and is dragging down, some of the other economies. But so long as employment isn't rising, so long as people aren't losing their jobs, so long as companies aren't yet going bust or really struggling, then then that's why sort of banks aren't feeling the pain yet. But I mean, I think in Europe it's starting to feel a lot more likely that we're going to see a bit more of that going into next year.
And when we do inevitably hit that potential peak raise, whether it's next year or the year after, whenever that is eventually hit, the burden on some of these banks to kind of find alternative revenue that isn't coming from interest income seems all the more important. What might that actually look like?
Well, I mean, interest income has been the thing that banks have, and especially in Europe, have been forced to live without for well over a decade already. I mean, the last year or so, we've seen net interest income rise very, very rapidly, obviously with rising interest rates. I mean, in the UK especially, it's already peaked, I think. One of the banks last week that reported that had a bit of a rough time was Barclays, and that's because they kind of somewhat surprisingly adjusted their expected net interest margins for the full year down already. So interest income maybe as interest margins at least may well have peaked already. Loan demand isn't particularly strong, and in some areas it's going to start to come down. So I mean, what they're going to replace it with is what they've been trying to replace it with for a decade already. And in some banks, that's about more wealth management. Others, it's going to be about desperately hoping for a pickup in investment banking and a continuation of some slightly better trends in kind of trading and markets as well.
Marion Halftermeyer, let me bring you in, our Swiss banking and wealth reporter, to look, I suppose, at the specifics around UBS and its earnings. I mean, do you think that the bank is going to see the benefits from the integration of Credit Suisse? I mean, this is a specific example. Some people even see UBS as a potential kind of European banking champion. Do you think we can go as far as to say that?
I think time will tell on that front. They still have a lot to go through with the integration, but we are going to be seeing their earnings next week. Hopefully we'll have a bit more clarity on just how much Credit Suisse is still losing in terms of profitability. They had kind of guided that they were going to be losing $2 billion worth of profit already this quarter. So we'll see how UBS absorbs that. Key will be to see that come down over the next couple of quarters and not eat into UBS's business, because in 2Q, for example, Credit Suisse's loss completely wiped out UBS's profit. So we need to see that calibration happen. And then, eventually, once they've been able to sort of fully integrate and capitalize on Credit Suisse's business, that's the goal, is can they be, a champion in the way that a Goldman Sachs is or JP Morgan is for investment banking, but instead for wealth management.
Where does that next leg of growth actually come from, though? I mean, Caroline just mentioned being kind of a European champion, but in terms of the international push, you've done some reporting on the Middle East.
Yeah, so UBS doesn't see itself as a European champion. It does see itself as a global champion. One of the big areas, you mentioned the Middle East, they gained a lot of foothold there with the Credit Suisse acquisition, because Credit Suisse was probably one of the biggest banks there, particularly for wealth management and how that ties into doing big deals with the sovereigns and royals and large business entrepreneurs there. So that's definitely putting them ahead of the game. But there are other large players as well, so they'll have to keep an eye on that. And then there's a geopolitical angle with that region right now, where they've recently had to cancel a big wealth conference in Qatar because of the conflict. So whether the short-term conflict will affect the long-term plans is remains to be seen, but that's certainly putting a bit of a delay in potentially their ability to put the pieces together with this acquisition. And then, of course, you're looking at the U.S. as a big wealth pool, and Asia as well is a bit more on the back burner because of the geopolitical tensions.
Paul, that's interesting, isn't it? About the regional push of these different banks. Do you see more job cuts coming for big European banks, certainly, as some of them try to refocus on different parts of the globe, perhaps, push away from China into the Middle East or in other places? How it does feel like a moment where banks are repositioning somewhat globally?
Yeah, so, in terms of job cuts, I guess we've had a few already, probably more from the US banks in Europe and elsewhere. I think, one of the things in investment banking and trading and such like among the Europeans is that they didn't really, hire quite so rapidly and quite so extensively during sort of, 2021 and into 22 when we had that real sort of boom in markets. So they've kind of they've got less people, fewer sort of, excess resources now. I think, Barclays is certainly talking about finding lots of efficiencies and making a few cuts, but we don't really know exactly where they're going to do that yet. They've been quite sort of coy about what their plans are. But for the most part, and again, especially in investment banking, one of the things that we've been seeing recently is actually quite a lot of hiring going on among kind of, deal makers, really good deal makers, as smaller banks and unexpected banks like Santander, for example, really stock up on sort of talent that's available that they can get their hands on now during this sort of relatively quiet period, in the hope that means that they'll get a head start and see be able to generate a lot more revenue when markets and deal making and so on picks up once, interest rates have settled down or whatever is the driver that brings back that confidence to get markets going again.
I love that you mentioned Santander, because of course we know they're trying to expand their Wall Street presence as well over in the States. Paul, very quickly, if you can talk to us about what other banks are in the rat race to kind of take up some of the market share that perhaps Credit Suisse has left behind. I
guess it kind of depends on the sorts of areas that you're talking about. the kind of the boutiques have been doing a lot of hiring, mainly in the US, but in Europe too. That's the kind of the Evercores, PJTs, they're quite large boutiques nowadays. Jeffries too, is that kind of real sort of tear expanding in the last couple of years. So, and I think that's where some of the market share has been going in sort of classic investment banking. And then in terms of trading, I mean, it's still a long, ongoing story of just everything gravitating to the biggest, most efficient shops. So it's still just the JP Morgans, Goldman Sachs's, sort of taking slowly more and more share from pretty much everybody everywhere else, anywhere in the world.
That was Kriti Gupta and I speaking to Bloomberg Swiss banking and wealth reporter Marian Helftemeyer and our Bloomberg opinion columnist Paul J. Davies. I'm Caroline Hepker here in London. You can catch us every weekday morning for Bloomberg Daybreak Europe beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. Tom.
Our thanks to Bloomberg Daybreak Europe anchor Caroline Hepker. And coming up here on Bloomberg Daybreak Weekend, the Prime Minister of Australia heads to China, and we head to Asia next. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. Diplomacy and trade in focus as a top government official heads to Asia. For more, let's go to Hong Kong and Bloomberg Daybreak Asia host Brian Curtis.
Tom, Australian Prime Minister Anthony Albanese will be in China during the coming week, looking to further stabilize bilateral relations. Albanese's visit will be the first by an Australian leader since 2016. While there have been some advances of late, China still has restrictions on Australian lobsters and beef, and there's a review on wine duties that is ongoing. One of the recent positive was China released Australian journalist Cheng Lei last month. She had been detained in China for almost 3 years under espionage-related charges. Joining us for some insights here on how to gauge success or failure for the Albanese trip is Ben Westcott, Bloomberg government reporter in Canberra. So first, Ben, before we get into some of the teeth about overall relations, any indications of progress in areas like beef and lobsters that may have been done behind the scenes that hasn't been made public?
In recent weeks, all I'd say is that Australia has been highlighting the lobster issue more, which suggests that might be an easy win for both China and Australia, a quick announceable, as they say, out of this trip, and obviously much less complicated than the wine sanctions, which are currently under review, or than the release of the remaining Australian in China, Yang Hengjun, who's been in prison there for more than 4 years. So, in comparison to that, a win on lobsters or a win on beef would be a much more easy thing for both of them to sell.
And you mentioned that they're setting aside for the moment the WTO wine dispute, and China has this review underway. Does the Prime Minister, does the government generally expect a positive outcome on that?
Generally, I think there is hope that will come out well, but what people have been saying is that this isn't as simple as the barley tariffs. So the process we saw for the barley tariffs earlier this year was that once the WTO report had been handed down, we then saw Chinese and Australians review the report, which was then led to a review of those tariffs by the Chinese side, their eventual lifting. And that took 3 months with a 1 month extension. Now, already, even straight off the bat, these wine tariffs have been given a 5 month review. And I've been told, off the record, that it's much more complicated than the barley tariffs were. So there's good hope. Treasury wine stocks have gone up, but no one's counting any chickens at this point.
Will Prime Minister Albanese have both the carrot and stick in his arsenal on this trip?
Prime Minister Albanese faces a really tough challenge in this trip. He has to step the line between not insulting his hosts, but not giving any reason for any people watching in the US or any sort of conservatives back home who are watching to gain any sort of fears about the relationship with China. What he said repeatedly is that Australia and China will cooperate where they can, disagree where they must. And I think that's going to be the trip. This is going to be the angle he follows for his whole trip. I had someone say to me, when you're walking down the Great Hall of the People towards Xi Jinping, it can be easy to get awed. So it's going to be very interesting to see how he handles this very delicate balancing act.
Exactly. Not the easiest time to bring up human rights or conditions in Xinjiang.
I mean, exactly. And I mean, the one thing that has characterized Australian diplomacy since May 2022, when the centre-left Labor government took power, was that they've done all that behind closed doors. With a few exceptions, they've generally kept criticism of China's human rights abuses behind closed doors in meetings with Premier Li Keqiang and President Xi Jinping. And as a result, possibly as a result of other things, they have actually had those meetings, which had eluded previous governments who've been more vocal. So that has been one major difference in Australia's diplomacy in recent years.
Ben, thank you so much. Ben Westcott, Bloomberg government reporter in Canberra. I'm Brian Curtis, along with Doug Krisner. You can catch us every weekday here for Bloomberg Daybreak Asia, beginning at 6 a.m. in Hong Kong and 6 p.m. on Wall Street. Tom?
Our thanks to Bloomberg Daybreak Asia host Brian Curtis. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning, 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Tom Busby. Stay with us. Top stories and global business headlines are coming up right now.